Yesterday, the euro paired the previous session's strong gains and entered a sideways range. Meanwhile, the British pound trimmed early losses and extended gains, driven by UK inflation data. US statistics on initial jobless claims and the housing market turned out to be rather upbeat. This indicates that the American economy is better coping with the growth dampening effects of higher interest rates than the euro area and Britain. Against this background, the greenback has great upside potential. Given that the European Central Bank and the Bank of England are preparing for a policy shift, investors' appetite for riskier assets remains subdued. Now let's take a look at today's macroeconomic calendar. It includes data on UK retail sales, which are estimated to have fallen by 0.5% in December compared with the month before. Year-on-year, British retail sales are forecast to have risen by 1.1% in the final month of last year. Germany is set to report data on producer prices, which are expected to indicate lower inflationary pressures. Furthermore, ECB President Christine Lagarde will deliver a speech. However, the head of the regulator is unlikely to say anything new. Traders may also take notice of US existing home sales, as well as the University of Michigan's preliminary readings on consumer sentiment and inflation expectations. If households' expectations for inflation rise, the greenback will likely gain ground at the end of the trading week. Thus, the riskier assets may come back under pressure. From a technical point of view, a false breakout at 1.0905 will create a strong sell signal. A bear case scenario is also possible if sellers regain control of 1.0875. If the price breaks below this level and tests it from the bottom up, the volume of short positions will increase. In this case, the euro is expected to dip to 1.0846. Its breakout will pave the way for a further decline to 1.0817 and even 1.0782. Much will depend on market volatility. At the level of 1.0782, I recommend going long on a rebound to catch an intraday correction of 30-35 pips. Long positions at 1.0817 and 1.0846 can be considered only amid a false breakout. If bulls take the lead at 1.0875, the middle of the sideways range, the euro will have a chance of rising above 1.0905. Its breakout and top-down test will generate a buy signal, with the euro climbing to 1.0945 and probably 1.0998. At the mark of 1.0998, it will be possible to go short on a rebound. Going short at 1.0945 and 1.0905 will be relevant only in the event of a false breakout. Meanwhile, the British pound has broken above the resistance level of 1.2696, which now acts as support. A false breakout at this mark following the release of UK data will make it possible to buy the pair, counting on a continued rally to 1.2727 and 1.2757. At the level of 1.2757, traders are recommended to go short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2727 can be opened amid a false breakout. Alternatively, bears may take control of 1.2696 amid weak data on UK retail sales. If the price breaks below this level and tests it from the bottom up, a sell signal will be generated, with the pound sterling sliding to 1.2673 and probably 1.2648. At the level of 1.2648, one can go long on a rebound in the hope of a 20-25 pip move. Going long at the 1.2673 mark, serving as intermediate support, will be relevant only in case of a false breakout. Best of luck!